I think by now people are kind of realizing for the first time that printing money doesn't work. We have different solutions to it. That's the only solution they got left.
$300 trillion, give or take, 250 disappears in financial assets and doesn't come back for a long time. That's the big news in the next coming years.
And it's a saying in any kind of marketing, things like this, demography is destiny. So when you watch what the demographics are doing, you can almost predict the future. And so we got through the problem. It's, a lot of it's just mismanagement of debt and printing money to solve problems and all this. And we're now in a triple bubble. We have a real estate bubble, stock market bubble, and bond bubble.
We had this first crash, a tepid bounce, and we have another one of the same magnitude. We're going to see 73.50, on the NASDAQ, down more than 50%. By late this year, early next year. The baby boom did cause, and I was the first one to say it, and it took me to the mid-80s. I didn't get it in 1982 fully. Mid-80s, see, this generation's gonna go into their peak spending cycle all the way into 2007, greatest boom in history, gonna make the 50s and 60s Bob Hope generation look like nothing, but then it's gonna crash. Okay, so that's the problem now. It did crash. And the bigger problem is government said, well, we're not going to let it crash. And I'm like, who the hell are you? Who are you to think a bunch of politicians that never did anything for a living, most of you, we're just not going to let the economy do what the economy will do to correct an imbalance of overinvestment in bubbles and financial assets and bring them down to normal so we can grow again. They're fighting all of this stimulus on top of the greatest demographic boom in history, but which did start to fail. So all this stimulus throws money into the economy. What do governments do with this thing? They buy financial assets. They start with bonds, but the more money goes in bonds, it will trickle into higher valuation stocks and real estate because that's where the returns are. So what we have now, and I got a number on this, it's close to $600 trillion in financial assets globally. Okay, 600 trillion, that's about 7 times global GDP at 95 trillion. And normally financial assets are a premium 2, maybe 3 times. So the biggest bubble in the world is all financial assets, even bonds. And when you have a crash like this, when these financial assets start to crumble, the money has to go somewhere. It goes into the safest areas. So it is the income producing real estate, multifamily mostly, and it is the treasury bonds, the highest quality government bonds. If the US government can print enough money to keep a dumb bubble going, they'll certainly print money to pay their bonds off, their treasury bonds, okay? You don't have to worry about a default on 30 or 10-year treasury bonds. And again, I go back and say, okay, let's look at 2008. When I look at the 2008 crisis, that was like 1929 to 32 coming in, except this time, massive stimulus, which they didn't do back then. So they come out of it, okay? But that's when you see things go down, financial assets go down, flirting with deflation. This time we're going to deflate more because they've tried to pump it up and it's failing anyway. So financial assets keep falling. So the money has to go somewhere. So it goes into the safest bonds and the highest quality real estate, which is the people. Again, real estate has gotten just as overvalued as stock. The people who are renting real estate, multifamily, the people who will need it more than ever, even people who would rather buy, can't buy in a bad market and hard to get loans. It's the safe areas. It's the U.S. Treasury bonds, which is the best bonds in the world. Other government bonds are good. Nothing's going to beat a 30-year Treasury bond, and nothing's going to beat in the real estate area. AAA corporate, and in the world, even, who's the best house in a bad neighborhood? Already been through. Is Europe in trouble? Yes. Has Japan been in trouble forever? Yes, okay? U.S. is still the best house in a bad neighborhood. And our bonds went up in 2008 crisis, 45% Treasury bonds, 30-year Treasury bonds, and they're going to go up more than that this time. So you go to the safest places. Again, where can you get predictable rentals, even in bad times from real estate, and that's from apartments and multifamily. And where are the best bonds that will be paid no matter what, when all financial assets have to go. And here's my number. From 600 trillion worldwide they're going to have to come back down to about 250 to 300 trillion. Now, think about this. Globally, 3 times global GDP in 95. And when the crash happens, I don't want to hold 30-year treasury bonds at 1 to 2% yields or zero. I want to get back into the best part of the world, and it's not going to be North America anymore. It's going to be better than Europe, but Asia is going to be better than North America and continue to be. That's simple. There's nothing simpler than demographics than that. We're better than Europe in the developed world, and as things move forward, all the growth is going to be in Asia, East Asia, going towards India, which after I die will be the richest, greatest, largest country. It is interesting to study other places that have had, inflation and crashes. I mean, I keep seeing people say this is going to turn into hyperinflation. No, it's not going to take much more inflation. It's already crimping our economy and bonds and stuff, and that's already going to lead to a downturn. I'm telling you, when we see this downturn, I think we're already into it. It's already starting now. Inflation will disappear at 9.1% or 10% if it gets to height, and never appear in the rest of our lifetime. That's a forecast.
Wow.
Never see inflation above a few percent for the rest of all of our lifetimes, even if you're 20 years old. That's my forecast. Because inflation was the major baby boom entering a great expense, and that caused a huge inflation. And you know what follows huge inflation? The disinflation and the boom that follows from that generation. Very simple also. I compare the cryptocurrencies, Bitcoin's just like the Amazon of it, okay, of the new .com retailers that were the rave of and they were the rave only in the last part of the 90s bubble, and were the epitome of it. Amazon led that bubble and crashed 95% before it then went from 136 to 6 and then to 3,500, the next boom.
Good.
That's how I see crypto. It's the next big thing. I didn't get it myself, Robert and Kim, until at my own conference, a guy was speaking. He said he defined crypto as the digitization of all financial assets and money. And I'm like, what's bigger than GDP 6-7 times all the financial assets in the world? And I'm like, oh, this is a big deal. It's the next big thing. So what happens? The .coms and Amazon is the epitome, bubbled in the late 90s, and that bubble crashed 95-96%. People thought they were dead forever, and then of course had the greatest boom. I see Bitcoin and cryptocurrencies, and there's 40,000 coins. Think of coins as an IPO with no cost. And the fact that after the $10 trillion in combined fiscal and monetary stimulus in 2 years after COVID, we are already falling into recession again. If that doesn't tell you something's wrong, you better wake up. This is not going to be a recession. It's going to be a mini depression that'll take a couple years to work out. My solution is let the economy wash out all this debt and bad companies. More zombie companies than ever, highest levels of debt levels and bad debt ever. We have to wash this out, or even with the millennial generation's demographics, we're going to at best crawl out of this instead of rise.